Hi everyone, my name is Vinyas. Some of you know me, and for some, I would be an online acquaintance. I am a corporate attorney by profession, having 13 plus years of experience in the corporate legal world. In my current and previous roles as an attorney, where I have drafted and specifically negotiated a lot of contracts around AI products, I understand the risks and required legal remedies around this evolving world of AI. In addition to that, my work in crypto domain gives me extensive experience of both these worlds, since both these worlds are data-oriented, especially when a lot of crypto projects like gaming, finance, advertisements, and real estate are developing their products powered with AI solutions. Having said that, since the full enforceability date of markets in crypto assets law, that is MiCA, is coming near and shall fall on December 30th, 2024, today I am creating this video for the right audience. I hope this video may help those people who have interest in this domain or those founders who are about to launch their own projects, for those who may need the proper legal opinions for launching their projects on the centralized exchanges, and for those who would like to have the proper licenses in compliance with the MiCA law. So, without any further ado, let's jump into it. At the forefront of the change is the European Union. The EU unveiled its proposed framework, the Markets in Crypto Assets Act. MiCA is a regulation proposed by the European Commission in 2020 designed to govern the issuance, trading, and provision of services related to crypto assets within the European Union. The regulation is part of the EU's broader efforts to modernize financial markets and establish a clear, reliable, and stable regulatory environment for digital finance. MiCA covers a range of topics, including the regulation of cryptocurrencies, stablecoins, utility tokens, asset reference tokens, and crypto service providers, such as exchanges, wallets, and custodians. And therefore, businesses that will be regulated under MiCA would be, including but not limited to, custodial wallets, exchanges, crypto trading platforms, and crypto asset advising firms, and crypto portfolio managers. MiCA's primary objectives are investor protection, market integrity, financial stability, legal certainty, and innovation and competition. It is important to highlight here, and to be understood by a crypto asset service provider, that is CASP, is that MiCA's framework encompasses all crypto assets, including securities and e-money, and regulates crypto asset service providers operating within the European crypto industry. Importantly, MiCA applies to any CASP serving European interests, regardless of where the provider is registered or established. With MiCA, individual national Web3 permit regimes will no longer exist. Prior to MiCA, crypto firms operating in the EU would have to comply with various different regulations and apply for multiple licenses. MiCA provides a unified EU licensing structure and introduces one authorization system that will be used by all 27 EU countries. Once authorized in their country of registration, CASPs will be able to provide their services across all EU member states. MiCA regulation will allow regional Web3 businesses to operate in the EU market without needing to attain a license from each EU country. Also, until now, anti-money laundering (AML) legislation has been responsible for regulating virtual asset service providers, VASPs. Any VASPs registered before 30th of December 2024 will require a crypto asset service provider authorization before 30th of December 2025. Now, the regulation became a law in June 2023, although 3 consultation packages were released for public feedback. On June 30th, 2024, Title III and Title IV became applicable. Now, on 30th December 2024, 5 more titles, which are I, 2, V, 6, 7, will become applicable. This is the very reason I am creating this video today, so that those projects which have their token generation event falling in next January or any time in the next year may make sure that they have proper licenses and are duly compliant with the law. Now, MiCA generally states that a crypto asset is a digital representation of a value or right that can be transferred and stored electronically using distributed ledger technology or similar technology. To govern crypto assets, MiCA classifies them into 3 groups. 1. EMTs, which are electronic or e-money tokens. 2. RTs, which are asset reference tokens. 3. Any other crypto asset tokens not covered in the first two groups. EMTs are crypto assets that are backed by a single official fiat currency. EMTs are subject to very strict regulatory requirements. MiCA's EMT rules are set out under Title IV and have applied since 30th June 2024. Asset reference tokens may represent a value, a right, or a mix of both, stabilizing their value by using one or more official currencies. MiCA's RT rules are set out under Title III and have applied since 30th June 2024. The last group of assets outlined by MiCA provides a catch-all for any assets that aren't EMTs or asset referenced. Rules for this group of assets are set out under Title II of MiCA. A common example of a token asset that falls into this group is the utility token, which is not classified as a financial instrument. Coming to the NFT space, MiCA does not automatically apply to NFTs, the non-fungible tokens. The only instances in which MiCA will apply is if the NFT has characteristics that make it similar to one of the assets that MiCA governs. For example, MiCA rules might apply to an NFT that is like a utility token or a financial instrument. MiCA also does not cover DAOs, DeFis, or dApps, that is, any other decentralized applications that are fully or truly decentralized, but as decentralization is quite a debatable concept, a qualified legal advice is highly advisable. Now, let's come to the brass tacks and let's discuss the title of the law. Title 1, Article 1 defines offering and trading platform requirements for publicly offered crypto assets and entities involved in them. Article 2 defines who the regulation applies to, and Article 3 lists definitions of all terms used in the legislation. Title 2 details who can create and offer a crypto asset to the public. An entity that creates and plans to issue a crypto asset that doesn't meet the definition of an asset reference token or e-money token must meet specific criteria like publication of a crypto asset, white paper marketing communications, etc. Also, if the tokens are rewarded for any work done or are offered for free, then these criteria doesn't apply. Critical to this Title II are the articles that outline what must be included in white papers and marketing communications for an entity to attempt to get a crypto asset listed on a trading platform. So, I believe that going forward, the legal opinions, which are mandatory requirements from all exchanges for any crypto assets to be listed on their exchange, will demand whether the white papers and marketing communications of the specific project are in line with the MiCA requirements. Next, Title III defines asset reference tokens, which, by the EU's definition, are tokens that try to stabilize their value using the value of another asset or right. This covers all crypto assets whose value is tied to or backed by other assets, such as officially backed currencies like the euro or the dollar. Many people call this a stablecoin. Title IV defines who can issue e-money tokens. E-money tokens are electronic money, referring to crypto assets that represent official currencies. Issuers must either be an authorized credit institution or an electronic money institution. This title also discusses how e-money can be issued and redeemed and how to write a white paper. It also defines the liabilities money issuers take on when offering an e-money token to the public. This Title IV includes trading platform rules that do not allow tokens with built-in anonymization techniques to be traded unless the traders and transactions are identified. This is not a ban on privacy tokens, it only prevents anonymous transactions from occurring on registered exchanges. Title V outlines who is authorized to provide crypto asset services and where they can provide them based on their location within the Union. The law allows the following entities to offer services: credit institutions, central securities depositories, investment firms, market operators, approved alternative investment fund managers, electronic money institutions, to name a few. Next, Title VI is one of the shorter titles in the legislation. It addresses market abuse concerns and the scope of abuses the title covers. Other standard investment rules, such as public disclosure of inside information, insider trading, and market manipulation, are also outlined. So, this was a gist video around the MiCA law. I know this one is not a very elaborative one, which could answer or explain many things, but we can always discuss in detail. So thank you very much for your valuable time you have devoted to hear me out on this subject, and I will soon post another video on a different subject. So thanks once again.